Time for our ETF Spotlight. Today we're taking a closer look at the major sell-off in technology. Dom Chu joining us for a run-through of some of the biggest movers. Morning, Dom.
Good morning, Sarah. So we know, given the action in the NASDAQ and NASDAQ 100, that the Qs, the Invesco QQQ, the NASDAQ QQQ Trust, if we take a look at those shares, of course, they're going to be down, driven by Amazon and Alphabet. Although we should point out, these are definitely off the lows that we saw in the pre-market session when Amazon was down by about 10% and Alphabet by 6+%. As you take a look at some of the places that we are seeing this kind of play out, we do know that on a year-to-date basis, if you go back in time, Amazon shares have breached that kind of key technical level, that 200-day moving average. That was around 1667. Right now we're at 1632. We'll see if that level kind of holds around here for it. With regard to Alphabet, same kind of thing playing out, although we've seen much more of a downtrend in volatile trading for these shares as opposed to that straight upward move that we saw out of Amazon.com for the better part of the last couple of years. Now, where we are seeing this play out in the ETF side of things is traditionally in those sector-based ETFs that we often talk about, the select sector spiders. But check out a couple of these ones. If you look at this particular ETF, this is the Vanguard Consumer Discretionary Oriented ETF. Amazon here makes up around 23% in terms of weighting of this particular ETF. That's going to be one to watch. It's an outsized mover today on the downside. Also one to watch here as well is a $9+ billion ETF called the First Trust Dow Jones U.S. Internet ETF, that ticker FDN. If you take a look at that, Amazon represents about 10% of this, and Google, with both the A and C shares together, represents 10% as well. So a 20% weighting for just Amazon and Alphabet for those particular shares in this ETF. Carl, these are some of the movers we're going to be watching, of course, in those broader sector-based ETFs as well, just because of the tech earnings wreck that we've seen so far. Back over to you.